Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. With the latest stimulus package being passed in the US, is now hoping they're moving to a more sort of recovery mode rather than a rescue mission. And certainly the US stock market seems to be trading like that. There's a lot of optimism now about sort of reopening the economy, and many states are starting to ease some of their restrictions now. Well, that's a bit of a double-edged sword because certainly as we head into sort of spring break, there are still many cases of COVID in the US. The vaccine is sort of being rolled out, but it's nowhere near sort of complete on its sort of vaccination program, and it's still a little bit of a worry that there could be a little bit of a surge and a sort of flare up again of COVID cases. Now, on the back of the rising optimism, it's seen a pretty major move in US interest rates as well. 10-year treasuries are now trading above 1.6%. Now, that does have some pretty major implications because certainly the 10-year is a sort of benchmark interest rate, which many sort of mortgage rates, etc., are set in the US. But also, as well, it starts to make them attractive globally when compared with other bond markets. Now, obviously, has implications for the US dollar as well, potentially strengthening that US dollar. But on the back of the renewed optimism, the OECD has now increased its global growth for 2021. Potentially, that now could be as high as 5.6%. That's up from around 4.2, 4.4, which was in December. That's a pretty major improvement in global growth, and I'd say it's all sort of pointing to a sort of recovering economy globally. So now it's just going to be very interesting to see what the Fed has to say this week. Certainly no one expects them to move anything on the interest rates, but it'll just be very interesting to see what they have to say about the rising sort of 10-year rate in the US, and also as well sort of interest rates going forward. Bit of a spike in cases in the EU as well. Many of the EU countries are now sort of, well, certainly the public have taken the view that now the vaccine is here and it's getting distributed, then, the sort of worries are over and they can go back to normal life. And that is certainly not the case. Likewise, in the UK as well, you're starting to see a gradual sort of reduction of restrictions, and really pointing to getting life back to a more sort of normal stance by sort of June, July. However, there's a little bit of a spanner in the works there with the AstraZeneca vaccine has now been sort of temporarily suspended in many EU countries over fears of blood clotting. Now, obviously, that has a twofold effect. It certainly puts more pressure on the other companies that are sort of come up with a vaccine, potentially more increased demand on that. But also, as well, it maybe spreads a little bit of fear as well about the sort of fake news that has been passed around about the vaccine, doubts, etc., and just sort of potentially adds to the number of people that are now holding out for taking the vaccine. That's another major issue to sort of overcome. The WHO came out and said there's no real link yet between the vaccine and blood clotting, and it's just going to be interesting to see how this sort of plays through in the next sort of couple of weeks. Because certainly pretty much the EU and the UK had pinned their hopes on the AstraZeneca vaccine. They pumped a lot of money into it, and that was going to be their major supply for the vaccine to be rolled out. So if they now have to go to Moderna, Pfizer, or Johnson & Johnson, etc., I say it's just going to raise a sort of fresh pressure on those countries that are already facing a sort of increased demand globally. Australia's faced an isolated case in New South Wales, which prompted a deep clean of a managed isolation hotel. But currently that seems to be under sort of control, and it doesn't seem to escape to the wider community. So again, as the Australian economy gradually sort of gets back up and running, there's now a little bit of talk about a potential sort of bubble between Australia and Singapore, and that will obviously give a further boost to the Australian economy. Here in New Zealand, similar to the US, there's been a pretty big move in the 10-year interest rate. That's up to about 1.8, 1.9% from around 1.1. And last September, it was trading around 0.5, 0.6. That's really a pretty big move in the last sort of 6 months. New Zealand equity is starting to recover a little bit of lost ground as well, though. February was one of the worst months for a long time, but starting to see a little bit of buying coming back into the market. And that's really on the back of sort of obviously low interest rates and people looking for dividend returns. Now, Mercury have a green bond in the marketplace as well. That's 5.5 years. The rate hasn't been set yet, but the margin is sort of 0.85 to 1% over the sort of 5-year swap. And if you're interested in that, go to the website www.bayfinancialpartners.co.nz. No further talk yet about the vaccine being rolled out in New Zealand. I'm just seeing sort of frontline workers sort of getting their shots currently, and the rest of the country is looking sort of June, July time before it starts to roll out. The government facing sort of increased criticism really for its handling now of the sort of managed isolation facilities, and certainly on the sort of backlog on that. I'm really just trying to sort of clear that and sort of get it through as quickly as possible. I mean, one possible solution would be to have the sort of Trans-Tasman bubble opened. If that was the case, that would reduce occupation in managed isolation by around 40%. So I say if you are looking for income options in this low interest rate environment, there are plenty of alternatives out there, some pretty good dividend stocks that will provide a pretty reasonable income stream. And if you're interested in looking and seeing what's available, go to www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.